Surprise topic. Hired and unowned auto liability seems to be continual over the years, even more so lately with new carriers entering the market, new different policy forms. Um, Again, unfortunately, back in 15 plus years ago, most of the hired and unowned forms were created equal. They were pretty basic, pretty vanilla, pretty broad. The reality, that's not the case today. So, um, we want to talk about some of the different nuances that are currently in the marketplace, as well as things to be considerate of and be cautious of, right? Because you don't want to have that major catastrophic loss that's not covered because you weren't aware of a restriction on a policy form. So, what are you guys seeing in from your end?
Well, look, I mean, it's no secret, right? Everybody's talking about this coverage line. Every association meeting we go to, people want to talk about non-owned and hired insurance. We're seeing different forms come into the market, but the problem that we have with it basically is the consumer doesn't know what they're purchasing. Not being educated well enough in terms of the limitations, and that's a problem, right? They're being sold on price, and ultimately, and they're doing so with the idea of getting rid of coverage. And that's an industry-wide problem from the perspective that you keep getting rid of that coverage, it's not coming back, right? So why would we bring those solutions to the table as opposed to something where we still have a broad form on the market and we're supplementing it with something like Wildland Dispatch? But I think ultimately, we need to narrow down and kind of alert people to what's going on out there in terms of these types of coverage restrictions. What do you think, Judge?
Yeah, I think one of my favorite ones I see is when $1 million is not $1 million, right? Which is a funny way of saying your defense of the policy, your defenses costs are within the policy limits. So you buy $1 million limit and you have a claim, and all of a sudden the cost to investigate the claim and the legal defense and all of those things start to pile up dollars. And in most cases, those are going to eclipse $100,000, right? Sometimes upwards of 250,000. You get to the end of that, and let's say you're found liable and the settlement's $1 million. Your expectation is that it's $1 million claim that's covered because you bought $1 million limit. When in reality, if the defense is within the policy limits, you eroded the $1 million limit with all those defense costs. And now all you have available is 900,000 or 750,000 for the settlement, which means you're coming out of pocket for the rest of it, right?
What's worse?
I've got to imagine there's going to be some problems, and you're going to have some lawsuits involving your customers as well that said that you told had $1 million. Well, they're going to come back to you and say, well, you really didn't have $1 million. So are you in breach of contract? Could that become problematic? Probably.
Yeah. Especially when think about too, policy aggregate, right? You're seeing a lot of these defense within the limit capped with the policy aggregates. First time we're seeing aggregates on auto policies, right? You see that more so on the general liability side. So again, to your point, ICE, you sign a contract that says, yeah, I've got $1 million, but what happens if you have a $500,000 claim in the middle of the term, for a different client? Do you really have $1 million for client B? You don't. It's gone. You
can't you can't just go back to the carrier and say, I need another $500,000. It doesn't work that way.
No. But again, this is stuff that's not being disclosed. That's the problem, right?
No,
when the consumer buys it, they're not being educated in terms of what this means and why it's there.
Yeah.
I mean,
the devil is in the details.
Even some states don't even allow it, right?
Yeah.
I mean, we've seen a handful of states completely outlaw the ability to have defense within the limits of a policy.
Yeah. Well, I think the other thing with the aggregate limit and some of the defense within the policy limit issue is buying an umbrella or excess liability, right?
Oh, yeah.
You've got a lot of the umbrella excess market, as we know in this space, is a challenging one, right? It's just one that they're not always comfortable with the non-asset based nature of operations and things that go on. And so there's a very limited playing field. You further skinny that down because the umbrella excess carriers do not love to see aggregate limits and defense within the policy limits on the primary policies they're sitting over top of. Why? Because they get dragged into claims sooner and quicker than they expected.
Mm-hmm. Agreed. So what other types of restrictions are we seeing out there? What about driver restrictions? Are those still an issue?
Yeah. I mean, I would be hard pressed to trust that every single driver, if I was an owner, every single driver of mine would not have some sort of violation on their motor vehicle record at the time of loss that might negate coverage. But we've seen that where there's a set of major violations that are in the policy form that says, hey, if your driver has this on their record, even if you didn't know about it when they have the loss, no coverage.
Right.
Right.
And
That's
what,
a big gotcha.
and even too, like you're supposed to be running MVRs every 6 months. If you're not doing that, no coverage. We've seen those types of restrictions as well. Again,
Yeah.
The consumer's not seeing that, at the point of sale, but it's stuff that's out there that you need to be aware of.
Yeah, I don't want to say we don't trust drivers, but the other one that circles around them or centers around them is what's their underlying auto coverage? And if it's not where it should be, does that negate coverage? That's a nice little one that's got slipped in by some of the insurers lately as well.
Mm-hmm. I'll tell you what, the one thing I've really seen on the big and bulky space, in that world, they're being sold a form effectively that really backs them into a corner as operating as a freight broker. Now, don't get me wrong, these guys are licensed freight brokers, and many of so are doing it for the purpose of creating separation between them and their independent contracting carriers for the purpose of classification, and that's great. But let's not forget that, these ICCs, while we want them to carry motor carrier authority, there are operating units under 26,000 pounds. So at the federal level, they don't need to carry it and, could find an auto insurer on a cheaper basis for them that doesn't have to post the necessary filing with the FMCSA that would support their operating authority. So if I'm in the big and bulky space and I'm getting a contingent auto liability policy that says, look, at the point of loss, you must be a licensed freight broker and be doing business with a licensed motor carrier or coverage doesn't apply, that's not making me feel good, at night, because it's just one thing where ultimately it's Murphy's Law, right? The one guy that has the claim that's a fatality is the guy that said, well, yeah, I don't need an MC number. I can get this cheaper insurance from Geico here. My trucks can still run and we're good to go. We really want those types of form limitations out there. Worse, do you know about it when you're buying that and when it might be 10-20% cheaper than a comparable product that doesn't have that type of limitation?
Yeah. I mean, there's only one general way to have a insurance market bring down premium costs or rate on the hired and non-owned that doesn't involve a deductible, right? And that's generally going to be by limiting coverage, right? Where can the insurer limit their exposure to the maximum amount of dollars they can pay out in claims? Well, it's easy. Take away coverage. So anytime that we hear well, it's the same, but it's way less than yours, I think that it throws up the red flag of it's probably not apples to apples, and you got to dive a little deeper on what the restrictions are.
Yeah, at the end of the day, you can't argue with 30 years plus of data, right? It is what it is. The numbers are the numbers. You can't outrun it. Now, are there ways, are future ways to improve the driver workforce? So, we've talked about, hopefully, with technology and safety and loss control. But again, that the proof is in the pudding, and that hasn't yet to be proven. So we're going to continue to deal with these modified forms in the industry that our insureds just need to be aware of. And again, maybe they're in a financial position where they have no choice, right? And if that's the case, we understand that you got to survive, but just understand what you're giving up, what you need to be prepared for should something arise, and work with a broker that can educate you on these topics.